This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is 12/15/21, show number 350. Well, it's the biggest Fed meeting of the year, Nick.
It really is. Today is Fed Day. So today at 2 p.m., the Fed will conclude a 2-day meeting, and they're expected to accelerate their $15 billion taper. The rumor is that the central bank's going to double it to $30 billion. They're going to start to taper $30 billion. And we'll see what they actually say. But traders like myself are now wondering how much of this is already factored into the market. We've already been told that they're going to accelerate the taper. They did that in front of a Senate banking committee, and Jay Powell now has to do it or else he'll lose all credibility. We're just wondering how much he's going to do it by. I happen to think that tapering is tightening, so I don't think that's a positive for the market. Maybe if he just does a little bit less than $30 billion, that will be a positive. So we'll have to wait and see.
Okay, well, it's an interesting proposition here. They got to do something. The inflation, if you caught the number yesterday, the producer price index is up nearly 10%.
Yeah, they're way behind the curve. They know they have to do something now. If they don't do anything, we'll be paying a lot more for every single thing going forward.
Yes, no doubt. No doubt we will be in any event. So is there going to be a Santa Claus Rally this year or what?
Well, I'm not thinking. I think there won't be. I don't think Santa's coming to town this year. But if there's not a Santa Claus Rally, that does not bode well for early 22 or the so-called January effect. So almost every time that Santa did not come to town, that has led to an ugly start of the year. And I think that's what we're in for this time around.
Yeah, and he's going to put coal in the traders' socks, and that's not going to be a good thing. And but as long as the people on Wall Street get their bonuses, then everything else can go to hell pretty much, right?
That's kind of how it works. But, there's some opportunities there, even if the markets go down. So, get ready. This is going to be a turbulent end of the year. I don't think this is a year where you want to be complacent and just look for that seasonality trend. I think right now we've seen, a lot of choppiness in this market really right before Thanksgiving. And I think that continues right into the end of the year.
No doubt. No doubt. Hey, precious metals. They've had trouble catching a bid. The spot gold is down $5 an ounce right now, and silver's down below $22. But really, taper or no taper, in the long run, it's not going to affect the value of precious metals here, except for it to go up.
That's right. Right now, I think we'll get more of a pullback in the next several months, or even a little bit longer potentially. But overall, it'll lead to another great buying opportunity. The bottom line is that precious metals are real money, and that's what a lot of people don't really decipher. They always think that, I'm going to get into Bitcoin, or I'm going to get into cryptocurrency or Dogecoin or one of the 9,000 other coins that are out there. But gold and silver have been the currency of choice since, biblical times. And, when you look at it that way, and you look at all the money printing that's gone on around the world, I mean, I have to be a buyer of gold on any major dip.
All right. Well, opportunities abound. Finally, our cryptocurrency sector, Bitcoin remains in a bearish formation, doesn't it?
Yes, Bitcoin right now, in fact, today it's down 1%, which is not that big a deal. But overall, if you look at Bitcoin, it's now forming a bearish chart base below the 200-day moving average on the futures chart. So I think that's a very, very negative pattern that's being formed. It takes a little time to play itself out, but that is not a pattern of strength. It's a pattern of weakness.
Anytime anything trades beneath or below its 200-day moving average, that can't be a bullish pattern.
No. The old saying is when you get below your 50-day moving average, you want to be careful. When you get below your 200-day moving average, you want to be ultra careful. A lot of institutional traders will not ever go long when an equity is below the 200-day. So now that we're putting in a basing pattern there, that does not bode well. So I would keep an eye on that, but that is ultimately a bearish pattern forming.
Yeah, you look at the sideways pattern, and it's nasty. You got a triple top put in, right? Pretty much a triple top, right?
You could say a double top, really, from the October high. You have a double top put in from there. If you look at the weekly chart, you could make a case for a triple top. But the last major high in Bitcoin was April 21. Then we put a top in, minor top in October, and then we put a higher high, nominal high in mid-November, and then Bitcoin has fallen now from a new high to below the 200-day moving average. That is never what you want to see.
That's for sure. So what's our next support level, like 41,000?
Yeah, you'll have some.
Like that support.
That's exactly right. You'll have some support around 41,000, and it's all the way down to a gap, which you'll see right around 32 to 34,000. So
yeah, I see that.
Those are your two big levels coming up. And again, we never this hasn't broken down yet, but it is in the process, or at least making the pattern to break down.
And then you'll know it's really broken down when it breaks that 30,000 mark, 29,790.
That's right. Once that happens, I think that's going to be the day where you see Bitcoin go to 12, 10, 15,000. And, a lot of people think that can't happen, but that can happen. So you got to watch this pretty closely. And again, just watch one level at a time. Don't ever anoint a level lower until you break the prior level. That's how I like to do it. And, we'll see where it goes. But right now, it is definitely looking weak.
Hey, just remember, nobody believed that a Tesla could be flying in space, a Tesla Roadster, and there's one there now.
There you go. All things are possible.
Anything could happen here.
All things are possible.
I love it. But yeah, those are some interesting technical points that you got to watch. On the other hand, if it doesn't make a new high, it's not going higher then, right? I mean, it would have to be making new highs.
Sure. You can, if you get back above the 50-day moving average on the futures right now, that's around 51,800. If you get back, that's a 100-day moving average, excuse me. If you get back above there, then, it starts to build a base, then you could start to fight your way upward. But right now, I just don't see a lot of strength here. The chart looks very, very weak on the daily. And also the weekly chart looks very, very poor too. So I would be very, very careful. I don't think it's an immediate breakdown, but I just think the process is already underway.
I'm inclined to agree with you. Kind of faked us out when it plunged down to 30,000 when it crashed back in July, by my birthday, in fact. And now it fought back, made a new nominal high, double top. And that head and shoulders double top really is pronounced there for what it's worth.
Yeah, right now, when you look at it, just as a golden rule, when you see something below its major moving averages, like the 200-day, just really, really be cautious with it. And I would not be committing capital here. And then, if it gets down to around 40, there may be a trade there. It gets down to around the mid to the low 30s, it may be a trade there. But, again, just watch these levels. These are the levels that you can trade it. Other than that, when you form a bearish base, it's a warning sign. Use it as a cautionary measure here.
Hey, can you pull up a couple charts for me, Nick? One for
sure.
The 1 year or 6 month 1 year chart for copper, and tell me what you're seeing there.
So copper has been coming down pretty sharply, and I think copper's headed to around 394. So when copper gets to 394, that's going to be its near-term support. Right now, though, it's been pounded to the downside and, again, has lower to go. But the next support level is going to be right around that 394 level. You put in a really good lower high in October. And from there, you've made a series of lower tops on the daily chart. Now you've just broken below all the moving averages in the middle of December. And now when you look at copper, it looks like it's a little bit broken now. You'll see this go down to 394. When it gets there, we'll see how they defend it. If it fails there, you'll be at 375. So those are the levels that I'm seeing, at least right now, and we'll see how it plays out.
Interesting moves ahead for copper. It's looking bearish, but supposedly supplies of copper are tight. The Warehouses are being depleted. So this is a case where the charts are telling one story and the fundamentals are telling another. And if you listen to Nick, you're going to follow the chart and not the fundamentals.
That's right. I would watch. And, again, copper should have some lower price action to go. But overall, again, watch how it gets into a level. That tells us a lot. And then if it breaks that level, it goes down to the next one. But when we look at copper right now, and that's something I chart every day, 394 is where I'm seeing it.
All right. Well, I guess we'll leave it at that. So you want to go over to inthemoneystocks.com, see how Nick has beaten the averages dramatically, beaten up the averages, I should say, for decades. Take a look at the Twitter feeds at ITMS, at Nick Santiago01, at Kerry Lutz. Your emails are welcome. Just shoot them off to kl@kerrylutz.com. And Nick, will talk to you on Friday.
Sounds good, Kerry.